you realize it hit $119 a barrel yesterday, and it freaked out the markets?
Yeah, the New York Fed coming out with its consumer expectations, and we get inflation expectations. And the good news is most of this done before the attack on Iran, and they remain steady for the 1 year, 3 year, and 5 year time horizons. Again, the survey taken between February 2nd and February 28th. Looking at it, they do remain steady at a somewhat high rate, near that 3% for the 1 year, 3 year, and 5 year, down actually a tick going into this situation with the spike in oil prices on the 1 year, but unchanged on the 3 and the 5 year. Expectations for food prices declined 0.4%, and rent was down pretty big, 0.9 percentage points. And rent expectations are actually at the lowest level since December 2024. That might bode well for the housing inflation component of the CPI. Gas price expectations, however, did increase 1.3 percentage points to 4.1%. And here's a chart that looks at how closely tied inflation expectations are at the 1 year level to gasoline prices. You can see they follow it pretty closely, and you might expect that to go up.
So the Fed focuses on oil, so maybe we should focus in on oil as well. So oil now is $90 a barrel. Do you realize it hit $119 a barrel yesterday, and it freaked out the markets? But the markets actually ended up flat.